Ever wondered how a banking crisis unfolds and how it can send shockwaves across the world economy? Well, let's delve into the recent banking crisis of 2024 to understand better. The seeds of the banking crisis were sown in the year 2023 when U.S. banks began hoarding almost $3.3 trillion in cash. This was a direct response to the banking turmoil that unfolded in March of that year when two significant players, Silicon Valley Bank and Signature, collapsed. The cash pile, albeit slightly lower than the peak seen after SVB's collapse, still loomed higher than pre-pandemic averages. Fast forward to August, the banking sector was hit with a ratings downgrade. Moody's lowered the credit ratings of 10 small and mid-sized U.S. banks and placed larger firms under review for potential downgrades. Moody's also predicted a mild recession in early 2024, leading to tightening credit conditions and rising loan losses for U.S. banks. As if the situation wasn't dire enough, the collapse of Silicon Valley Bank highlighted the risk of polarized politics in the United States. Republicans blamed SVB's collapse on socially progressive investments and government intervention, while Democrats called for more regulation of the banking industry. This partisan mistrust could hinder efforts to address future financial crises. Now, let's shift our focus to the real estate market. Commercial real estate values plummeted, with Morgan Stanley estimating a potential decline of 40%, similar to the magnitude of the 2008 financial crisis. U.S. banks held about $2.7 trillion in commercial real estate loans, and about 80% of that was held by smaller regional banks. However, the problem didn't stop there. More than $2.2 trillion would come due between now and the end of 2027, putting regional banks in a tough spot. New York Community Bancorp reported a surprise loan loss of $552 million, driven partly by expected losses on commercial real estate loans. Germany's biggest lender, Deutsche Bank, also allocated $133 million during the last quarter to absorb potential defaults on its U.S. commercial real estate loans. That's more than quadruple the amount it set aside during the same period in 2022. In response to this, Jerome Powell acknowledged the challenges and anticipated working on the problem for years. According to the National Bureau of Economic Research, about 14% of all commercial real estate loans and 44% of loans on office buildings appeared to be in a negative equity position, increasing the risk of borrowers defaulting on their loans. In conclusion, the banking crisis of 2024 was a complex interplay of economic, political, and financial factors. The key takeaways from this crisis are the importance of prudent financial management, the peril of political polarization, and the risks involved in real estate loans. As Jerome Powell said, though there will be losses for both the owners and the lenders, the situation should be manageable. The economy remains strong, and there's every reason to think it can get better. But as always, the future is uncertain, and only time will tell how this crisis will shape the global economy.